Hey, it's Tom here and welcome back to the channel. So, of course, on the YouTube channel here, all the time we talk about investing. It's literally in the name of the channel, Investing with Tom. But one of the important things that you need to be able to do in order to make, successful investments is to obviously have some initial money to invest. So, in this video, I want to give you some of my top tips for saving money. I've used these personally to save a pretty high percentage of my income, and I've made some videos on the channel about that in the past. And combining these tips basically allowed me to save $100,000, reach that first, $100,000 threshold of initial capital about 3.5 years into my working career, and on a fairly modest income as well. I'm not making hundreds of thousands of dollars a year or anything crazy like that. So I want to share some of those tips in this video, but before we get into that, we do have a sponsor for today's video, and today's sponsor is Hatch. Now, Hatch have been a long time sponsor of the channel. They are my personal broker of choice for me as a Kiwi making all of my US share market investments. Now, I initially switched across to Hatch purely because of fees. I was paying like $90 US a trade at one of the big banks for trades I can now do for $3 US in Hatch. Hatch also have far more attractive foreign exchange rates in my experience than some of the larger banks as well, which is kind of one of those hidden fees that can really churn up a big kind of percentage of your portfolio when you're trying to make, overseas investments. It can be quite a painful experience to have to lose like a high percentage of your capital when you exchange your money for US dollars or another currency. So those are a couple of the reasons why I really like Hatch. They also continue to improve the platform and have recently launched kids accounts. So if you're interested in getting an investment account or portfolio set up for your kids and getting compounding working very early for them, you can now set up those types of accounts in Hatch for even lower fees than their traditional brokerage accounts with the $3 US a trade that I'm telling you all about. So if you're interested in checking out Hatch, you will need to head to the link hatch.as/investingwithtom. If you head to that link, sign up and start a new Hatch account and deposit 100 New Zealand dollars into that account, you'll get a free $20 top up so that you can get started investing with a little bit more money. So saving money, it's not the most exciting topic in the world for many people, but it is a necessary evil if you want to build up an investment portfolio or buy a house or whatever your financial goals may be. And Charlie Munger back here, who sits behind me in all these videos, is famous for once, answering someone's question at a Berkshire Hathaway annual meeting. The young guy was basically asking, how do I get started on this journey to getting where you guys are, where, Warren and Charlie are with billions of dollars. And Charlie Munger basically replied and said, well, the first 100K is a bitch. And there's really no way around that. When you don't have a big investment portfolio working away and producing, compounded returns for you, it's really hard to make significant net worth progress. So you have to save up an initial pool of capital in order to get that snowball really working effectively. So here are some of my top tips in order to save that initial pool of capital in order to get the snowball rolling at a much faster rate. Now, there will be timestamps right along the bottom of this video. I suspect probably the first two tips in this video are going to be fairly familiar to most people, so you will see what those tips are along the bottom of the screen here, and if you want to kind of skip forward to some maybe more interesting ones, feel free, but I just cannot make this video without talking about these first two. So the first one is as obvious as it sounds: living below your means. Now, saving money, mathematically at least, is a really simple formula. You make a certain amount of income, in order to save some of that income, you have to not spend it all, right? So, if you get paid $500 and, you have some bills go out and so on, and you're left with maybe $300 or $200 or whatever that number is, you can't go and spend that $200 or $300 on, putting new wheels on your car or something. If you consistently spend, everything that you earn, you're just going to not make any progress. So as simple as it sounds, you do have to live below your means. And I think for a lot of people, particularly if you're in your early 20s, I'm, now 26 years old, I think as you kind of go through your 20s, you'll find that there's probably more and more pressure to upgrade your lifestyle, which we'll talk about in a second. But really, when you're in your early 20s, or even if you're in your late teens and you're already working, No one really particularly cares if you live well below your means. And it's one of the best times that you're ever going to have in your life for saving. For me personally, I don't own a house, I don't have children. I know a lot of people in their early 20s are in that exact same situation. Of course, some aren't, and it is going to be more challenging, if you have extra financial responsibilities. But if you don't, you're in a prime position to take advantage of the fact that you don't have many financial responsibilities. And it's going to be as easy as it probably ever will be to live really significantly low in terms of the amount of living costs that you have on a day-to-day or week-to-week basis. Now, the second tip I have that flows on kind of nicely from this and is a nice sort of practical way of actually implementing living below your means and consistently saving money is a tried and true concept called paying yourself first. Now, paying yourself first basically means that every time you get paid, you're automatically kind of taking a portion of that cash and putting it into savings and investment accounts. And basically what you do from that point is you survive on what's left. So the traditional way that a lot of people do it, if they don't, perhaps have a lot of financial education or anything, is they'll get paid, they'll spend their money, they'll pay their bills, they'll go out and do whatever they want, and if there's anything left at the end, maybe they'll save that and put that in a separate account or whatever, or maybe they'll even leave it in the same account. And that's really not a good way of consistently contributing to savings and investments. The preferred way for me to do it, and the tried and true method to do it, is to automatically take a big portion of that payment that you get off the top and basically just live on what's left. And that has a couple of really key benefits. Now, the first one, frankly, is you're just going to spend less money. If you take a whole bunch of that cash and put it into savings or investments that you just can't touch, you're going to have less to live on in your day-to-day life, and you're going to be far less tempted to pull money out of savings accounts and spend it than you would be to just spend money that's in your everyday checking account that's linked to your FPOS card or your debit card or whatever it might be. So that is the first thing. The second thing is also that it allows you to set savings goals really easily, and this is something that I've found massively beneficial. So I'm on a regular 40-hour a week, 5 days a week kind of job. I get paid every fortnight, and I'm obviously getting paid the same amount every fortnight. So for me, paying yourself first is a really nice way to basically just automatically funnel money off and actually save the same amount of money every fortnight really consistently. And if you're saving the same amount of money every fortnight really consistently, it makes it very simple to set goals. So I can very easily calculate an annual savings goal that I maybe want for the year, and then work backwards and figure out, okay, how much do I have to take off each paycheck in order to reach that number? So that's my second tip. Pay yourself first. It really does work, as boring and as simple as it might sound. It's been by far and away the most powerful kind of personal finance tool I've used to save more money. Set up a separate bank account if you don't already have one that's purely dedicated to savings, and automatically every time you get paid, take a big chunk of that pay and put it into those savings and investment accounts, and make that an account that you're never going to take money out of unless you need it to put towards a house or to buy shares or whatever it might be for you personally. Now, the next tip I have here is one that's basically allowed me to improve my savings rate over a period of time. So from year to year, my savings rate as a percentage of my income has basically gone up every single year as a result of using this particular tip. And that is basically to avoid lifestyle creep. Now, again, if you're someone like me and you're relatively early in your career, it's going to be fairly likely that year to year you're going to, progress in terms of your salary. So maybe you start out in some sort of low-paying graduate position, or even if you don't have a tertiary qualification, maybe you're kind of starting as an apprentice or working your way up to higher-paying roles once you're fully qualified and so on. And that's great. It's always nice to get extra income and kind of move up the ladder. But one of the traps that a lot of people fall into is when they're doing this sort of pay yourself first mentality, like I talked about in the previous tip, they will continue to pay themselves first kind of the same amount, and as their income goes up, they'll still pay themselves the same amount, and they'll just spend more. So if they get paid an extra $5,000 a year, for example, their spending will go up to match that. It'll go up about $5,000 a year. They'll maybe splash out a little bit more on going to fancy restaurants or buying a car or whatever it might be. Now, one of the things that I've done is, again, I've taken advantage of the fact that I don't have a lot of financial responsibility in my life, and every time that I've gotten a pay rise at my job, or I've earned money from YouTube, for example, any extra income that I've ever had has always been 100% saved. So basically, I have lived on the same amount pretty much since I left university about 4 years or so ago. And the pay yourself first segment has kind of just bumped up, incrementally as I've had a higher and higher income. And that's allowed me to avoid lifestyle creep, avoid, keeping up with the Joneses and trying to spend money on things that really don't make me happy and don't help me progress, which is something that does make me happy. So that's the way that I've structured my life. And it's been hugely beneficial to avoid that lifestyle creep. Like I say, when you're in your early 20s, you don't typically have a lot of pressure from other people to live at a certain standard or whatever it might be. So you're in a prime position to take advantage of avoiding lifestyle creep, saving as much as humanly possible in order to get the benefits of that further down the road. And also, if you do have a bit of a lifestyle creep, it's really, really hard to go backwards and reduce your living expenses. It's generally a kind of a one-way street. So the longer you can avoid that lifestyle creep and incrementally having higher and higher living costs, the far better off you're going to be financially. Okay, so the next tip I have is sort of a two-parter. In a lot of ways, it's treating yourself a little bit like a business, and that is leading a capital light life is the way that I've kind of worded this. And the other part of it is kind of focusing on the larger expenditures and the larger things that you have in your life. So when I say lead a capital light life, anytime that I, as an investor, am looking to analyze a business, one of the characteristics of a really phenomenal business is something that earns a high return on capital. So they have a relatively small amount of assets and they earn a very high return relative to that asset base. So they don't have to spend gazillions of dollars, and that's a technical term, investing in different assets in order to generate their income. And if you're a salaried employee, you're probably unlikely to require a lot of capital to generate your income. So, for example, if you're a business and you are Apple and you open a new factory, spending that money to open that new factory is likely to increase your income because you're then going to be able to sell more iPhones or whatever it might be. Now, if you're treating yourself personally as a business and you go out and buy a flash car, that flash car is not going to increase your salary. So you're not getting a return on that capital investment. So I like to lead a capital light life is kind of the way I word it. And one of the main ways of being able to lead a capital light life is to basically focus on the really large expenditures. So a lot of personal finance channels will bring up the things like, don't spend $5 on a coffee down at Starbucks. We don't really have that many Starbucks in New Zealand, but down the cafe, don't spend $5 on the coffee or whatever. And, of course, those things add up. I'm a bit of a caffeine addict, to be fair. So I'm probably a bit biased in terms of being against that one, although I do make most of my coffees at home, I must say. Those things do add up, but really the things that are going to make the most significant difference in terms of your savings rate are the larger expenditures in your life. So things like your rent or your housing costs, things like your food bill, things like cars and holidays. If you can make, significant savings in those things, they're going to have far more of an impact in your financial life than saving a few dollars here and there on a coffee. And a good example of that for me personally would be something like my rental costs. I live in a very small, many of my friends and family might say too small, of a one-bedroom place with my girlfriend, and we've lived in the same place for 4 years now. So we've had very cheap and very consistent kind of rent. Our rent's only gone up once in about 4 years. Hopefully my landlord's not watching this and pushes the rent up after hearing that. But we've had one rent increase in 4 years. We live in a very, very modest kind of place, and that's been a significant part of us being able to have a very high savings rate, both of us individually. And that again is an example of something that's going to have a far larger impact on your financial life than going out for the occasional coffee, or maybe every few weeks going out to breakfast with your friends on a Saturday morning, or whatever it might be for you personally. Now, the final tip I have here, and I don't want this to come across as sounding like it's something that's really easy to do, because in most cases it's not, but that is to try and find a way to increase your income. And I'll give you a couple of tips on, I guess, how I've done that here as well. So I guess with expenses and, your everyday living costs and so on, there's only so low of a point you can get that down to. If you just, scrape by as much as you can, you're going to eventually find a floor in terms of how low you can get those expenses. So eventually you are going to have to get the income portion up for yourself. And there's a couple of ways of doing that. Now for me, that's again been progressing through my job. But one of the main ways I've been able to do that for me personally is starting up something like this YouTube channel. And I want to give a couple of tips on things that I would consider if you're looking at perhaps starting up your own kind of side hustle, I guess. Now, I'm not going to say that everyone should go out and start a YouTube channel. I just don't think it's right for everyone. But there's a couple of kind of characteristics to things like a YouTube channel that can certainly be applied to other side hustles. And the main idea I want to get across in this part of the video is the idea of finding something scalable. Now, what I mean by finding something scalable is trying to get away from basically trading your time for money. So for most people, when they go to an everyday job, they are working, a certain amount of hours and they're getting paid for the, proportional to the amount of hours that they put in. Now, one of the cool things here with something like YouTube is the number of hours that I put in don't necessarily matter. What really matters at the end of the day is how much quality content can I put out? What do you guys watching the video, think of that content? And if you watch it and you like and you subscribe and it attracts more views and more views, that's what's going to be significant in terms of progressing forward. So if you look back at my YouTube journey, for example, I spent about a little bit over a year not getting paid a single cent on YouTube. And although I've kind of steadily put a little bit more time in as the weeks and months and years have kind of gone by with YouTube, my time sort of investment in the YouTube channel over time has not gone up at anywhere near as quick a rate as the income from YouTube has gone up. So I've consistently put out 2 to 3 videos a week as an example, and the income has steadily gone up and up and up and up. And that's obviously been fantastic. And like I say, if I'm avoiding lifestyle creep and paying myself first and so on, all of that extra money is getting funneled towards long-term savings and investments for me. So if you're someone that's thinking of starting a side hustle, try and find something scalable. It doesn't necessarily have to be a YouTube channel. Basically anything where you're not trading your time for money is ideal. Maybe it's writing a ebook, or maybe it is starting some sort of online store where you're selling t-shirt designs, or maybe it is some other thing that you have a certain skill set in that I just can't think of right now as I'm filming this video. So try to avoid things where you trade your time for money. Try and find something scalable. And the cool thing is that I've seen some great stories of people that have started these side hustles that have turned out to be really, really scalable and have turned actually into full-time businesses for people. So if you're trying to look for a way to get some extra money in the door, I would certainly recommend giving it a crack and try and avoid trading your hours for money, because there is a ceiling to that you will hit very, very quickly. And we don't want ceilings in this game. We're trying to get as much money in the door as possible at a certain point. So try and find something where you can really scale things up with fairly minimal movement in terms of your time investment as things progress. So there are some saving tips from me. I do hope they were useful. These are all things that I've applied for a number of years now that allowed me to save a fairly significant amount of money. I think maybe by my age, I don't quite know. Maybe it's not impressive to other people. Maybe it's impressive to some. I don't really know, but nonetheless, I'm pretty comfortable and happy with kind of the way that I've been able to progress financially up until this point. So I do hope you enjoyed the video. If you're interested in the Hatch offer, head to the link hatch.as/investingwithtom. Please hit like and hit subscribe on the channel if you haven't already. It does help me out a lot. But that's it from me, and I will see you in the next one. Cheers.